welcome to The Farm. On the show this week, SEBI takes action against Zenith Infotech's promoters and for the first time holds a board of directors accountable. CBEC's January 1st nightmare continues, even though high courts and the appellate tribunal call the circular unlawful, illegal and arbitrary. This week's top story goes back a few weeks. Last month, SEBI barred the promoters of Zenith Infotech from accessing the capital markets on grounds of fraud, misleading and inadequate disclosures and violation of corporate governance principles. But more importantly, and in a first for India, the regulator has also held the board of directors at Zenith accountable, asking them to provide a bank guarantee for the funds misused. It's a novel order, an interim one, and one that may also throw up some jurisdiction challenges, as Paiswini Upadhyay reports.
On January 29, 2011, Zenith Infotech's shareholders approved a board proposal to raise up to $333 million to redeem FCCBs maturing that year and next. According to the shareholders' approval, Zenith could either borrow the money or raise it via the sale or lease of business divisions. On September 26, 2011, Zenith Infotech informed BSE that the company has spun off one of its two business divisions to Zenith Monitoring Services, a company in which ZIL was a majority shareholder. Despite realizing money from the sale of this business division, the company defaulted on its FCCB repayment obligation, yet made no mention of this to the exchanges. The default came to light only when the BSE on October 13 raised the matter with ZIL, at which point the company informed the exchanges that it had defaulted on its payment of $33 million of FCCBs that were due in September. The default and its delayed disclosure made media headlines, then followed investor complaints and a SEBI investigation. SEBI found that between September 23rd and October 13th, the period in which the default took place but was not disclosed, Zenith's share price fell from 190 rupees to 93 and further half to 45 rupees by November 30th that year, causing considerable loss to shareholders. Last month, the market regulator passed an ex parte ad interim order against the promoters and directors of Zenith Infotech. The first violation, non-disclosure of material and price-sensitive information. SEBI noted that the two series of FCCBs due for redemption in 2011 and 12 had terms of cross-defaulting. That is, default in the redemption of the first series would trigger default in the second. Zenith and its promoters and directors were aware of this, chose to default and made no disclosure of that to the exchanges. Besides inadequate disclosures, SEBI has charged the promoters and directors with misleading disclosures as well. In its letters to the exchanges and SEBI, Zenith had claimed that it was negotiating the terms of repayment with its FCCB holders and hence did not make the disclosures. But SEBI noted that at the time of making this claim, the FCCB holders of Zenith had already filed a suit against the company and a separate winding up petition as well. SEBI concluded that disclosure by Zenith was in the face of it false and misleading.
If you are talking about a situation where a company has defaulted on a loan repayment, very simplistic. Let's not worry about raising money to repay and all that. Just take one example of a company having defaulted to repay the loan. The question is, that's a matter of disclosure under the corporate governance, under the listing agreement. You need to disclose the fact so that people know that you have defaulted and there is a concern in the mind of the investors. That is a very vital information for a person to determine whether he wants to invest or stay invested. Therefore, that's a matter of disclosure, even on a plain vanilla basis.
Zenith Infotech's alleged violations are not limited to disclosure issues. SEBI has also accused the promoters and directors of fraud. It noted that while Zenith sold its MSD business division to raise $48 million towards FCCB redemption, $33.93 million of that amount was instead diverted to several unrelated purposes, beyond the authorization of shareholders. For instance, $13 million were transferred to promoter-related entities, another 11 million to a Singapore subsidiary of Zenith. Transactions that the SEBI order referred to as asset stripping in a fraudulent and deceitful manner, charging Zenith and its promoters and directors with fraud and FUTP violations.
If there was a condition to use it for X and it was used for Y, then it is clearly a violation of the shareholder approval that was obtained under Section 293 of the Companies Act. And there's no doubt that the company could face consequences for that. But the question is whether SEBI has jurisdiction, because that's a matter for company law. Shareholders can bring an action through the company for breach of directors' duties or even potentially an oppression action against the promoters. But whether it's a matter for SEBI to implement a decision under Section 293, there could be jurisdictional issues.
It's not so much oppression and mismanagement, though you could term it that. It's much more serious. It's plain and simple fraud. So I would hesitate to call it oppression and mismanagement, which can happen even in situations which are not as serious, in which you have related party transactions which are not completely kosher, but they're not illegal either. This seems to be a fairly straightforward black and white case. So, and SEBI definitely has jurisdiction over listed companies and fraud which happens in listed companies.
If you see the order, there is absolutely no specific finding that there is a prima facie case of fraud having been perpetrated. It's a question of impropriety at this point in time. And I think there is more evidence, a lot more evidence required to actually show that there was indeed a fraud committed on the shareholders or on the FCCB people. The facts are not adequate, according to me, to come to that ironclad conclusion.
But SEBI concluded otherwise and has banned 6 promoters of Zenith Infotech from accessing the securities market. And in a first for India, the regulator has also held Zenith's board of directors accountable. Zenith's directors, 2 promoter and 2 independent, have to furnish a bank guarantee of $33.93 million. The amount that was raised to redeem the FCCBs but was diverted elsewhere instead. And SEBI has specified that the board cannot use Zenith's funds or assets to raise this guarantee.
This certainly seems to be something peculiar, because I have not come across any previous instance where the board has been asked by SEBI to compensate the company. However, SEBI does have fairly extensive powers under the SEBI Act, and one of the powers which has been constantly exercised is the power to disgorge illegally gotten profits. And in this case, there could be an argument that SEBI is simply seeking to recover monies which otherwise belong to the company.
When SEBI comes to the conclusion that it should direct the board of directors to give a guarantee, I would have expected certain amount of discussion as to the implication or the kind of role that the board of directors played, or some kind of complicity or some kind of culpability, but I couldn't see any of those discussions. I thought the conclusion that the SEBI came in asking the board of directors to give a bank guarantee is something was very abrupt, according to me, and that too exactly the amount that was due to the FCCB holders. Therefore, I feel, and that too without using the company assets and all that stuff. Therefore, I feel, firstly, whether SEBI has power to do this. Number 2, whether SEBI could have actually found out the role played by non-promoter directors.
I think the answer is somewhat logical. It seems to be premised on some level of duty and liability on the board of directors. And assuming that the independent directors are completely faultless, they will of course ask the promoters to pay up the premium which is required to get the bank guarantee. So ultimately it may not be as unfair as it sounds, because the promoters will cough up that premium. And ultimately, of course, once the final investigations are over, I'm sure if SEBI indeed finds that the non-promoters or independent directors are not at all guilty, they would not impose the standard in the final round.
SEBI's order is interim. The accused will now get a hearing, after which the final order will be passed. But before that happens, Zenith, its promoters and directors have already moved the Securities Appellate Tribunal against this interim order. It will be interesting to watch how Zenith's independent directors fare in this battle. Lawyers representing them say not only do they deny misuse of funds, but also question the passing of an ex parte order in a 2011 matter. There was enough time to have given the directors a hearing. Also, how can SEBI ask the directors to pay a dollar-based guarantee? Answers to all these questions will emerge over the next few weeks. In Mumbai, by Ashwini Upadhyay.
Well, it would be interesting to see how independent directors on the board of Zenith feels that one. With that, let's take a quick break on the firm. But on the other side, CBEC's January 1st nightmare continues, even though High Courts and the Appellate Tribunal called the circular unlawful, illegal and arbitrary.